Thank you all for taking the time to come and listen to us today. I've had the pleasure of hearing some really, really fascinating discussions so far. Hopefully we can keep that up for the next hour or so. My name's Tom Burchfield. I'm head of market intelligence at Liv-ex. I'm going to be talking about a pretty broad topic, the new fine wine order. Hopefully it's going to set the scene for an interesting discussion with Krista and Robert afterwards. Given the time constraints, it's going to be relatively high level. But what I'm going to go through is essentially a state of play. Where are we today in fine wine market? After such I guess, a fascinating discussion around sort of AI sommeliers, it's going to be a bit around price, so bear with us. I'm then going to do a bit more detail by wine region and also by trade market. I think it's undeniable that probably now more so than ever, the outlook for the fine wine market varies depending on producer, brand, vintage, whether you're based in the UK market, EU market, US market, we all know why. So I'll cover that. And then, yeah, a bit of a deep dive on Bordeaux and Burgundy, you know, the historic engine rooms of the fine wine market. Where are they today and what does it look like going forward? So, where are we? So after what was actually the longest and the deepest downturn that the fine wine market has had since Liv-ex has been monitoring this for the past 26 years, since September, there is a degree of stability that has returned to the market. The Fine Wine 100, which is the industry benchmark for monitoring fine wine prices, has risen consecutively for the past 6 months. We're not talking about massive gains, it's about 4% up in that period, but that is positive. I think the outlook is generally one of increasing stability and predominantly at the very, very top end. But in the wines that we report on and we track, now compared to last year, there are more wines that are either stable or slightly increasing in price than there were a year ago. So that's positive. Now, I think it's really interesting and important to bring sort of sentiment in here. So every January, Liv-ex surveys its members, and these are 550 of the most important fine wine businesses from across the globe. And we ask a very simple question. It's where do you expect the Fine Wine 100 to close that year? And this year, the average prediction is a rise of 2.1%. Again, we're not talking about massive growth, a V-shaped recovery. That's not on the cards. But I think it is significant when you consider that this time last year, they were anticipating a 2% fall, and actually ended up being about a 2.5% fall. It's not a massive change, but I think it is significant after that sort of steady downward grind of 3 years. As a whole, the fine wine industry is seeing more stability. And I generally agree with that sort of aggregated outlook. I've sort of split this into a good, not so good, but not so bad and bad column. On the good side, I think it's undeniable that demand-supply balance is actually increasing. We monitor this very, very closely at Liv-ex. We started to see increased demand coming into the market last June. Subsequently, prices started to find a bit of stability in September. But if the previous 3 years have been characterized, or sort of the symptom of a massive supply-demand imbalance in the market, essentially too much stock, that balance seems to be improving. European buying over the past 12 months is up 44%. This is obviously positive, and I put it down to essentially European buyers finally seeing value. Prices are off, on average, 30% since 3 years ago. So it looks to us like European buyers are actually finally seeing value and actually being confident that if they buy now, whenever they need to offload that stock, it won't have decreased in value. Foreign exchange swings obviously come into this as well. An Asian market, it's a very, very broad and complex market, but there are some positive signs. We anticipate that the Asian market is a bit further ahead in the cycle. I'm sure we'll discuss this a bit later. But buying is up 25% year on year. Focusing on, for example, the Hong Kong market, we are seeing consistently increased demand for a liquid category, such as blue chip, back vintage Burgundy. it appears that that stock overhang, which has really been blighting the Asian market, the Hong Kong market for years, is showing signs of actually burning through. You would, of course, expect to see that burn through first in the liquid categories, such as blue chip Burgundy, but that's what we're seeing, and it tallies with the anecdotal sort of indications that we get from the region whenever we speak to Liv-ex members. It's not a super rosy picture, but it's better than it was 12 months ago. Back vintage stability. So the likes of Bordeaux 16, even more recently Bordeaux 19, Bordeaux 2005, Burgundy 2014, these great vintages, more wines are now showing stability than are falling. This is a positive sign. In the in the sort of not so good, not so bad column, UK market, the historic engine room of the fine wine market, sentiment is better than it was 12 months ago. We see this in the level of just bid exposure, so demand that we see from UK merchants. That's risen consistently since sort of the midpoint of last year. This tallies also with what we're hearing of UK buying teams being given a little bit of rope. So there's been a buying moratorium, buying for stock that is, for years now, and we are seeing UK merchants, UK buying teams tentatively start perhaps buying for stock. They're not pushing prices, but there is demand there, and they're focusing on proven producers, proven vintages. Again, it's not like the UK market is still definitely characterized by risk off, by caution, but the outlook is better than it was 12 months ago. Now in the negative column, I think we all know why, but US market uncertainty. US buying is down 50% year on year. Again, we do see some perhaps positive signs from that market. From a low point in July last year, US bid exposure, so US demand, has slowly ticked up, and we're seeing increased trade from that region. But I think the really interesting thing we're seeing is that, okay, so last April the 2nd, Liberation Day, US bid exposure dropped 80% overnight. What we've seen since is that US bid exposure, so the level of demand, has risen, but we're seeing less knee-jerk reaction. So when there was the Greenland situation a month or so ago, and then tariffs were off, and then tariffs were back on, we're not seeing a plummeting or a rise in bid exposure. It generally looks like US merchants have more of an idea of how they're going to navigate the current situation. But it's not to say that it's a great situation. So obviously, US merchants will be feeling the pinch. On the definitely negative side of things, recent vintage price instability. Bordeaux 22, 23, 24, I think undeniably have further to fall. And we're seeing this across regions with essentially prices really falling post-release. So that's kind of the overall lay of the market. Focusing in a little bit on specific regions, I've tried to group them together by regions which share characteristics or actually kind of differ. Champagne and Burgundy, particularly sort of the more liquid side of Champagne, the likes of producers like Salos, Salon, which kind of share more Burgundian characteristics. They really flew up during the low interest rate backdrop of COVID. And then particularly if that purchasing was debt financed, when interest rates rose, that demand collapsed, and subsequently prices have fallen pretty sharply since, but are showing a little bit of stability. Bordeaux, historically the engine room of the market, the most significant fine wine market still, and I'll get onto that in a little bit more detail in a moment. But I think you have to really differentiate between back vintage Bordeaux and recent vintage Bordeaux. We monitor this at Liv-ex with two indices, the Legends 40, which tracks back vintages, great back vintages from blue chip Bordeaux, and then the Bordeaux 500, which is comprised of the 10 most recent physical vintages of 50 leading chateaux. And I think it's pretty clear to see that back vintages, there's greater stability, and the outlook is definitely more positive. Italy and Rhone, whether Italy is a country, but in general, the Italian market differs hugely from the Rhone market. Italy has consistently defied expectations over the past 3 years during the downturn. The outlook is relatively good, and I'm really talking here about Tuscan wines, so the likes of Sassicaia, Ornellaia, Tignanello, these well-understood brands that are produced in good volumes, they're drunk. Compared to the Bordeaux first growths on which they kind of mirror themselves, they have better quality price ratios, etc. But the outlook for Tuscan wine, I think at the moment is pretty positive. On the other hand, the Rhone is really in doldrums. It's sort of the opposite story. It's very illiquid. Very little amount of trade goes through for it. It has benefited historically from a lot of US demand, and with US buyers sort of withdrawn, the outlook for the Rhone market is not super positive at the moment. Finally, in this sort of whistle-stop tour of the world, California and rest of the world. California, I think, is an interesting one. The secondary market is very, very thin. And I think there's actually a real divergence between the sort of the cult producers, the likes of Harlan, Promontory, Screaming Eagle, and the next rung down, sort of Opus One, Dominus. The top of those sort of cult wines, we see their prices look really, really precarious. Whereas the next rung down, they're produced in much higher volumes, they're drunk more consistently, they're more widely understood, they're bigger sort of brands globally. The outlook for those is a bit more positive. The rest of the world, and we group Spain here, I think it's, in my opinion, is difficult to talk about, or what we don't see is, for example, a Spanish market that's really going great guns. What we see is specific producers, specific brands, specific vintages, which perform really, really well. So that's kind of, we're not seeing, for example, a Spanish market as a whole that's really expanding onto the fine wine market. So, from sort of where we are today, sort of what we've seen over a bit more of a long term, and where's that sort of pointing for the future, the fine wine market has become much, much, much more broad. I think you just need to look around who's presenting here today and how many halls there are. 15 years ago, the secondary market was 80% Bordeaux in terms of value. Now it's 35%, and it's not just Burgundy and Champagne that have sort of taken a bite out of Bordeaux's pie. The market is much, much broader. We also see this just purely in the number of different brands and vintages that are traded. It's up about 4 times over the last sort of 15 years. So there's a very, very long tail we see. What we see is actually that the majority of trade is still focused on those sort of historic blue chip wines, the ones that we all probably know, but there's just a much broader market as a whole. So, Bordeaux. As I've said, I think we need to differentiate between back vintage and recent vintage Bordeaux. But the headline is that prices are down about 26% from peak. Market share for Bordeaux has decreased over the long term. And I don't want to put it all down to release pricing, but I think this kind of shows quite well the dilemma that Bordeaux faces. And what you can see here, fortunately it's a big screen behind me, is the returns that various steps of the supply chain would have realized from Bordeaux over the past 15, 20 years. In blue, it's the return that you would realize as a collector. In gray, as an importer. And then in that burgundy color is the return as a négociant in Bordeaux. Now, this also neglects or sort of dismisses or doesn't take into account costs of carry. And if you're storing a wine or a case of wine in bond in the UK, that costs about £15 per case per year. But as a collector, if you had bought Bordeaux en primeur since 2016 and still have it in your cellar, you would be out of pocket. Now, I think the issue gets more profound when you consider that as an importer, your margin has also been eroded. So if for whatever reason, as a sort of an importer in the UK, you had taken on Bordeaux stock en primeur and not managed to sell through and still have that in your cellar, you're essentially sitting on a depreciating asset. So it's much harder for the UK market, the biggest historic buyer of Bordeaux en primeur, to really get behind a campaign if you're not sure that you're going to be turning a profit in the long run. I think the argument on the collector side that we see is, okay, so as a collector, if the price is going to fall post-release, why should I be buying en primeur? Why can't I just wait for 10 years when the wine's closer to its drinking window? I'm not going to be saddled with those storage costs, etc. That's a pretty hard argument to make that you shouldn't do that. The other thing that we are seeing is a flight to value. And we see second wines really be sort of the victim here. Second wines, the likes of Carouades, Lafite, etc. These have historically been the cheapest entry point into a brand. They've historically done very well in the Asian market. Since the top of the market in September 22, that demand has essentially collapsed. And that sort of segment looks pretty risky at this moment. I'll get into this and sort of maybe tee up the discussion a little bit. But I think what we're seeing in the Bordeaux market is essentially stratification at the producer level, but also at the négociant level. We hear of, well, at the producer level, if you're pricing your wines high, you can essentially reduce your costs, reduce your the costs that you're selling, and still be turning a margin. The further you go down that price pyramid, it's getting increasingly difficult. We're hearing things like crop pulling schemes. These are mostly affecting at the moment the lower end of the market, but I think are slowly creeping up. But it's affecting the next step of the supply chain as well, négociant. We're hearing of producers wanting to work with fewer négociants, and we're also hearing in the UK of importers also wants to work with fewer négociants. So there's sort of a squeeze at that point of the supply chain as well. Burgundy. So as I said, I think the headline is that Burgundy prices have fallen pretty far since the peak in September 22, down about 33% on average. What we are seeing is that there is actually a real divergence in the performance of white Burgundy and red Burgundy. White Burgundy requires less storage time, is readier to drink more quickly post-release, is drunk more consistently throughout the year, and therefore, of course, has a better supply-demand balance. Sort of return to what I was mentioning earlier. The past 3 years have been characterized by a massive supply-demand imbalance. Within the Burgundy market, we see that demand-supply balance resetting earlier for white Burgundy than for red. Slightly conversely, I appreciate this might not be the most easy chart to to interpret, but I think what we're also seeing in sort of the point of stratification is that the top of the Burgundy chain, top of the pyramid, looks to be more stable than further down. We're seeing demand rise more significantly for those top level wines, potentially wines that are most widely understood, than further down. So I think that sort of lower end of the market looks a little bit riskier. I'm very interested to hear, for example, what we're seeing in the on-trade in restaurants, for example. So yeah, just to sort of, I guess, introduce the discussion, what we are seeing is increased price stability. The market continues to show signs of entering recovery. We're not seeing a V-shaped recovery. I think that's actually a good thing. What we need now is a period of flat prices, and this will instill a bit of confidence on the merchant side. They can again perhaps start buying for stock, hopefully in the confidence that it's not going to fall in value before they actually sell that stock. It also gives an opportunity for the new generation of collectors, which I'm sure lots of the panels will be talking about this week. It gives the new generation of collectors an opportunity to enter the market at those lower prices. We need the new generation of collectors to build up a passion for fine wine, to build up that long-term sustainable demand. Further stratification, as I've said, I think kind of across segments, the top of the market looks more secure, and further fragmentation. Again, I think the next generation will be less bound by the classics. I'm sure there's something we'll be discussing a lot. But I think price is a key consideration. And what I think we'll see is that wines that are at attractive prices with interesting stories, they'll play a critical role in the next phase of the market. That is everything from my presentation. Thank you very much for listening.
Can you hear me? Okay, thank you. So that was
Shall
a
I come
really
around here?
interesting presentation. So we're going to get into a whole lot of these things, but to start, I'd like to introduce Krista Benson, who's the founder of Star Wine List in Sweden. And if you haven't seen Star Wine List, you must look at it. Krista started with a key insight, which is that if you navigate the world of restaurants by the wine list, you will only ever find good food in restaurants that have good wine lists, whereas if you look at it by food, you can sometimes find great food but poor quality wine. So if you're ever traveling anywhere, look at Star Wine List. And Robert Joseph, famous wine critic, peripatetic winemaker, brand builder, lots to say, and now living in Bordeaux, lots to talk about. So Krista, could you start us off and talk about the on-trade and what you're seeing in wine lists?
Absolutely. Thank you very much. And thank you for the start, Tom. So Star Wine List is both a guide and a media platform focused on wine in restaurants, with recommendations in more than 46 countries now, ambassadors around the world, sommeliers and writers. It's an app and a website, so check it out. We've had some, over the last quarter, we've done a lot of conversations with sommeliers across the markets, qualitative ones. You know, what do you see over the last year and the coming year are the factors that you're looking for? And we also asked, what are your guests actually asking for? And then what do you think the market trends are? And touching about what you said, that thing that comes back across the board is value and good value. That the somms themselves are looking for a good value, the guests are asking for a good value, and the entire trend is about good value. So that's kind of and then you can go into the different criteria and regions and styles, etc. And yeah, I think that's kind of the main takeaway there.
Robert, do you want to introduce your interest in fine wine and give us some remarks?
Well, firstly, I think there is a question of how we define fine wine. And I think, Tom, you made a good point at the beginning of essentially fine wine, you could say, is the stuff that is traded. But there are a lot of people who think that's not true. A lot of people will say, oh, my wine's fine or his wine's fine. How do we actually define fine wine? A lot of people have tried that. I think what's interesting to me is trying to look at fine wine, if we're using that expression, within the broader concept or context, of wine and alcohol. And I think compared to because I've been around for a long time, and I remember when I was writing books in the 1980s, as you showed on your chart, investing in wine was blue chip and nothing else. Compared to all other investment classes, you didn't leave the classics if you wanted to make money. And by the same token, people I knew used to buy 10 cases of wine or 5 cases of wine en primeur, and reliably they would sell half that many or whatever, and they would finance the wine they drank with the profit they made on the wine they sold off. And that generally worked, and that was a pattern. And those people were drinking wine most days. I think we've seen a huge difference in our drinking pattern. It's fascinating to me to see we're closing 1 pub per day in the UK. We are closing cafes. The cafes that rely on alcohol in France are closing at a similar rate. So the idea of alcohol being the sociable thing we do when we go out is no longer nearly as true as it was. And I've been doing some work on zero alcohol. And the fascinating thing is Marc Almert, former Mayor Sommelier du Monde, was at Vinexpo at Wine Paris last year or the year before, talking about zero alcohol. Why? And he said, why, as a sommelier, talking about zero alcohol? Because at lunch, I have to make money for my employer, and at lunchtime, we're serving water. And in the evening, we're serving a certain amount of water as well. And I'd rather sell a zero alcohol drink at a good margin than water. So I think we have a broad context of whether as many people are drinking as much of any alcohol as they were, and looking forward where that's going. And just briefly to wrap that up, living in Bordeaux, the anecdotal stories I'm getting from retail stores that belong to the Negociant is people who used to buy cases of wine are now buying bottles of wine. So because they're not investing in them, they're not leaving them for a long time thinking the value is going to go up. They still like drinking it, but not necessarily as often. And so I'm questioning the volume of the market as much as the value of the market.
Krista, you've had some discussions with sommeliers about this very thing. Do you want to talk about what they're seeing?
Yeah, working you up. Come back to the non-alcoholic part as well, but the value and pricing and not buying a case and a bottle instead. One thing that we've heard and seen in restaurants, one example was Taiwan in Paris. They've actually trimmed the prices to make the bottles more attractive, but also putting a larger selection of wines by the glass at much higher premium, the top wines by the glass, because previously you might have shared a bottle of wine, but instead, I'd like to have one glass of the Arnaud or top wine instead, and I'm happy to pay 50 euros for it, but I'm not going to go for a bottle. And we also, for instance, in New York, same Pascal Lepeltier of Chambers said, losing volume, people are not buying the bottles anymore, but putting a much higher selection of wines by the glass at really much higher prices, and people are happy to pay $50 for a glass of wine and stay there and not go for the bottles. So tying into what you said there.
Could I just chip in briefly, which is that what I see, this starts at the entry level. Felicity and I were actually in the States not that long ago. An entry-level glass of red or white in a US restaurant seems to be about $18 these days, plus the tax, plus the tip you're going to put. I hear a lot of resentment about those by the glass prices. So I'd be interested. Pascaline says it's okay, and maybe the $50 glasses she's selling are selling. But I have a question over that.
Do you think it's the fact that when you go to a restaurant in the US, you're paying $18 a glass and you're basically getting bulk wine, whereas what you're talking about is you're talking $50 a glass of something that might be a great classic?
Exactly, and we touched upon the entry level before, and the Burgundy pricing, being priced out of the entry level selections. They might be shown on the $50 glass of wine, but people are looking for value at the lower end. But these are kind of, instead of a bottle buying, that you go for the higher end pricing.
Tom, can I come to you? So your charts show that this sort of fall has happened in the last 3 years. And if you look at the overall wine market, we can think of reasons why people drinking less, cost of living and so on. But the fine wine market typically isn't affected by those same forces. What's caused this fall in the last 3 years? Is it interest rates? Is it just simply a correction?
Well, I think interest rates sort of have driven the correction. I think if you need to rewind to what we were seeing in that boom between 21 and 22, is essentially prices rose at an unsustainable rate. So when interest rates rose, that sort of speculative demand, which had really fueled the price rises, that withdrew. All that demand disappeared, and that's meant sort of that prices have collapsed afterwards.
So is it a collapse or is it just a return to the historic norm?
I think this is an interesting one. I was speaking to Robert earlier, whether this is something cyclical or if it's structural. I'm not sure we fully have the answer. I think in terms of the sort of the structural problems, one issue that I tried to introduce was around sort of the next generation of collector. And this is where I sort of personally am slightly sort of nervous, and particularly sort of speaking about Burgundy, is that to build up a sort of a passion for fine wine, you have to drink it. And I think the problem is that there aren't enough wines at sort of the level at which the new generation of collector are coming in that actually invite them to drink the wine. On the on-trade, sommeliers, are they actually drinking top-end Burgundy and the Bordeaux classics? I probably doubt that they are, to the degree that people did in the past. So the ability with which they can speak to their customers, and if they're speaking to younger customers again, they're not going to be able to say, hey, I drank this last night, it was absolutely delicious. That's just not happening. So that's something which I think is probably a little bit more of a sort of longer-term structural problem. But there are certain things. So sort of a supply-demand overhang, that is part of a market cycle. And that's where we do see some sort of green shoots.
Okay. I should just say something about the collectors. So I didn't introduce myself. I'm Felicity Carter. I'm editorial director at Arena Global, which is a fine wine think tank in London. And we've just finished doing a 18-month research project into new collectors. And one of the things that we heard is how resentful young would-be collectors are by being shut out of the market, that they can't buy. Even if they have the money, they can't buy some of these top wines if they don't have existing long-standing relationships with merchants, that they have to have a certain spend every year before they can get into the market. And then last week I was in California and I heard the same thing. People saying, you know, why should I stay 8 or 9 years on an allocation list, and when I finally get there I've got to pay $5,000 to stay on the allocation list. Robert, what's your view about all of this?
Can I quickly pick up on something Tom made a second ago? I was at a tasting of Burgundy en primeur around this time of the year in London last year, the year before, standing next to a British wine writer who made the interesting point, which is tying in with what you just said. This person never buys these wines. There is no way they could ever afford to buy these wines. So you have two things going on at the same time. One is the wine critics, the wine writers, who used to have a huge influence, have lost their influence. There are fewer of them, fewer columns. But the ones who survive, there are fewer of them who can actually afford to buy the wines for themselves. So they're only basically tasting wines at events put on by the producers or by merchants or whatever, which isn't giving a very broad picture. Now back to your point, Felicity, about the being shut out. Yes, I think you're absolutely right. I think that we live in a world of instant gratification. I'm used to wanting something, I go onto Amazon, I ask for it, and it arrives. I'm not used to having to sign up. Like my father or my grandfather joining some gentleman's club in London and waiting for 20 years before he could get in. That isn't the way we tend to look at things, current generations do. And it is not friendly to the consumer. And I think they're expecting far more friendliness than we're giving them.
Yeah, I just want to ask you about what seems like an apparent contradiction in your slides, which is that you're saying there's a flight to the classics and a flight to safety in the top. But you also said that the future collectors are going to buy much more widely and that fine wine can really come from anywhere. Do you want to talk about that contradiction?
Well, yeah, I think it's probably something. So at the moment, you know, it's essentially the market is characterized still by caution and risk off. So I think the sort of the short to medium term, we're definitely seeing a flight towards the less risky bets. And the less risky bets in the fine wine market, particularly the secondary market, are wines which have sort of the history. They have been traded, they have been collected over a very, very long period. So that's kind of where we are, I think, in terms of sort of the short to medium term. But the next generation, I don't think will be necessarily bound by those same sort of dynamics.
Krista, what are you seeing in terms of what sommeliers are talking about? Classics and safety versus new regions?
Yeah, and also the access. I was thinking about that. A lot of wines that were really hard to get on allocation to restaurants have been, were not picked up as much, or have been coming back to the market. We were talking to a sommelier and cavist in Paris recently, and they said, we're getting calls all the time if we want to buy some Domaine Labbé, which is a top Jura producer, and it was really hard to get by. Not so long a time ago, but now in France, people are sitting in too much Labbé, which in France and a lot of part of, let's call it millennial and below, that is a fine wine by benchmark definition, but it was not in previous benchmarks, etc. So I think that's grown out a lot. What's considered fine wine, it's a lot longer tail that you told about fragmentation. I'm a bit curious about these wines that you cannot even get on the list, because there is so much stuff being traded and stuff like that.
Where did it all come from? I mean, we know that the market has been, maybe in freefall for the last 3 years, but what suddenly released all of these amazing wines onto the market? Does anyone know?
There's a lot of it around. I mean, I think...
But why?
Sorry?
But why?
What wine? Or
no, why? Is there suddenly all these unicorn wines
People need cash.
Yes.
No, I think two things.
Bring up capital.
People haven't been buying it. As I said, Bordeaux, we're about to see the 25 vintage come on track. You've just heard from Tom. There's a lag of 24s, 23s, 22s that haven't been selling, or that people have been buying, or the merchants have been buying and are not happy with owning. Now, one of the things I like to pick up on, and talking about what is a fine wine and what isn't a fine wine, there's an implication to a lot of these charts that it is cyclical, that there is a norm, that we're going to go back to some kind of wine as a passion investment that will go on. I'd like to bring Sauterne into this equation, because Sauterne used to be seen as a fine wine. It was, you know, it was up there. Yquem is in theory higher rated than the top reds. Sauterne, I'm one of the people who's been predicting that Sauterne would be a good investment for such a long time. I'm one of the people who thought the Chinese would get into Sauterne, and I was wrong. You know, by now I think anybody who invested in Sauterne at any point over the last 20 years has lost a lot of money, and not many people are going to do it now. And I'd be questioning whether there aren't other wines that couldn't actually get into the Sauterne cycle, where people just aren't needing them or wanting them.
That's a good entree into, let's talk about the state of Bordeaux. What are you seeing in restaurants with Bordeaux, Krista?
Well, this is more qualitative than quantitative, but you know, and also looking at value, where there's so much older vintages and mature wines, and we've seen that it's come onto a list, and people see you can actually get things that are age and are interesting at prices that you can put on the list at really decent levels, which is either hard to get or impossible in terms of price for many of the more trendier regions. So I think it's come back. It's still an alien wine for a lot of somms in the world to have Bordeaux on the list, unless you're in a classical restaurant. But we definitely see and hear more of it nowadays.
Tom, you know, that another chart that you showed that the margin has all been eaten by the chateaus in the last few years, and that merchants have not been able to make money from Bordeaux. What will it take to correct that? Apart from the Bordelais cutting their prices.
I can feel a lynch mob. I mean, I think there are a couple of things in terms of what are the potential solutions. Potential solutions are reduced supply, and we are seeing that with sort of less volume being released en primeur. We're seeing Bordeaux as a whole, with the crop pulling scheme, essentially try and restrict supply. That's a way of essentially meaning that you don't have to do the thing and reduce prices. I think Robert disagrees with me to some degree. I think there is a price point at which Bordeaux works. I just don't think that that the Bordeaux market is willing to sort of actually bite the bullet and go down to that price. I think what I was trying to get at in my presentation around stratification is that it's undeniable that if you're at the very top, if you're Lafite, for example, you can essentially eat some margin and be absolutely fine in the long term. The further down you go, and I think what we're seeing is that further down is actually rising up, is that if you're releasing your wine at, say, 30 euros ex chateau, your cost base over the last 15, 20 years in general has risen pretty significantly. So you're kind of boxed in. You're releasing your wines, and lots of them are making better wines than they've ever done, but you're releasing your wines into a market, and that market is saying, sorry, I don't want that. So it's very, very difficult, and I think that's where sort of the further you go down that sort of quality pyramid, I don't really like that phrase, but sort of maybe price pyramid might be better, the more difficult it becomes. Yeah, I'm not sure. I'm not sure that's the real solution. I'd probably say price.
You've been an observer of Bordeaux over a long period of time. How long does it take before they finally are willing to reduce their prices or do whatever it takes?
Well, the first thing is they would say, we did that last year. We were bullied into reducing our prices. We did. Now, we can question whether they did it enough, but they certainly did. It didn't work. Now, this year, they've made better wine. So why logically should they sell it for less than last year? Well, to sell it. The question is, by dropping the price, and this is where Tom and I could go hand to hand on it, yes, if you gave it away really cheaply, people would buy it. But then, long term, what is the value of your business? Now, at the 30 euro people, they're stuffed, if you like. Top end, you could say they're okay. But Bordeaux actually looks cheaper per Parker point or spectator point than Napa. Napa is the most expensive wine per point in the world. However, we could argue that the Italians, the Tuscans are cheaper, and Australia and Chile are cheaper still. We have got question on style. We talk about mature vintages. There is a question of whether the people who are buying wine today actually like the flavor of old wine as much as they like the flavor of young wine. And that's something we never really talk about, but you do hear that question coming up from sommeliers and others who've opened an old bottle, and I'd be interested, you may have some thoughts on this, Krista. The customers don't actually appreciate what's happened to it. But the other question I'd like to throw into the pattern that we haven't really talked about is, it goes back slightly to my pub point, is whether these young collectors and the people we're talking about who are the future of the wine world, how often are they drinking? What are they drinking? The French used to drink wine every day. It used to be a third. Now it's only 11% of the French who drink wine daily. Now we could argue that the wealthy and the wine collectors do it more often than that. But I don't think we've actually got any guarantee of that. And if we look at in the US, we look at the tech bros, we look at the Musks and the Zuckerbergs and the Gateses and so on, they're not regular drinkers. And we look at the people who are around them, actually sleep. Actually, I find I don't, not me, but they're saying, I don't sleep as well, I don't operate as well when I've had alcohol last night, so I don't now drink from Monday through Thursday. And that's a sort of behavior pattern that you're seeing more and more of. And restaurants are seeing that as well in terms of behavior. And then we have GLP-1s in terms of the drugs people are taking to cut their appetite. I am questioning whether our intake of alcohol at whatever our price, our income level, is going to be as much in the future as it is today. Whether we'll actually be going to restaurants as often or whether we'll be drinking as much wine in restaurants. And I think that has to have an impact on the wine market.
Krista, we need a correction to that doom and gloom. What have you got?
Yeah, definitely. I mean, the GLP-1s, etc., were affecting. You know, you hear about the menus, etc., and.
Can you hang on, when you say you're hearing, I hear this a lot. I hear a lot of anecdotal information that it might hurt the market or it might. What are you actually hearing? What are people telling you?
Not that much in terms of our conversations about that in particular when it comes to wines. I mean, moving from bottle to glass, etc., that we talked about, but not that the GLP-1s would be a factor in it that they've seen.
So, but anyway, to go back to the how often are people dining out, you know, those things. Do you have any insights into that?
Yeah, not statistics, but you know, we see that in a lot of markets, people still go out, still go to restaurants, but are spending less. It came this exuberant boom after the pandemic. Everybody went out and loved it and had 2 bottles of wine, and that we saw on the prices and everybody raising prices as well. Then inflation came, interest rates are set. People don't feel as rich when your house gets more expensive and you don't have the disposable income. You get the hit. The restaurants as well, selling a glass instead of a bottle or water instead of a glass of wine. And that's hitting back on the wine market. And we talked about this as well, that you felt amazing if you're a producer in a lot of countries coming out and raising your prices after the pandemic. Not as fun to lower them the year after because, you know, the market can't support it. And then, you know, it's a resistant to do that because, you know, last year we were $100 wine. Why are you telling me we can't be in that stratosphere now? We need to come back to the market. I'd like to touch also about the Bordeaux cycle and pricing. I'm an old Bordeaux resident. Love the wines, love the region, love the people, everything. And especially kind of the, you know, Petit Chateau and all the lower mid-range wines from Bordeaux are some of the best value in the world, which, you know, people don't see or use or drink as much. Right? We get stuck in talking about the entrepreneur and the next season and what's selling, what's not selling. And I think that the whole négociant system, has become a machine to talk about prices and raise them over the years. And the chateaus were jealous of the négociants, that the négociants were making money. You raise the prices because I want a bigger piece of that pie. The négociants have to catch up or just buy it. And then the market and the consumer becomes, you know, the last part of that puzzle.
Yeah, I think from what I hear, some of the négociants also stopped representing a lot of Bordeaux wines because they were representing international wines. The Beyond Bordeaux, they made a lot of bets on that, which have they paid off?
No, they haven't.
Yes, no, I think there must be a lot of stock sitting in Bordeaux. I want to completely change the subject, Tom. So when I was in London, all of the merchants were decrying the fact that all of the rich people had left because of tax, and they'd all gone to Dubai. And now in Dubai, they're all leaving Dubai. What do you think the current situation in the Iran war? How's that going to impact the fine wine market?
Wow. Okay.
And then I'll open it up to general questions.
Easy question.
I mean, in general, sort of global political turmoil is never good for any market. It's not great. In terms of what we've actually seen over the past week or two, you know, obviously, we haven't seen too much of a change really in terms of how sort of the fine wine market is actually acting as a whole. We're seeing a little bit of more reticence of sort of demand, a little bit of a dampening of demand, but we're not seeing anything just yet. But in terms of, I guess, that broader question around, okay, if you're a UK merchant and you're seeing your sort of historic, sort of traditional customer leave, then that's not positive. I think the other thing that we always hear merchants they're consistently grappling with is that question of the new collector. So it kind of seems a bit like a double whammy. If you're having your traditional collector leave, you're not quite sure of how the next generation of collector is coming. Essentially, where is that demand coming from?
So it's probably time to open up questions to the audience. Does anybody have any questions? Yes.
Thank you all. Do we see at the horizon a new Chinese market? a new market that can play the role that Chinese market had in the fine wine market over the last 20 years?
Can I chip in on that? I think the history, and I was around to watch that, and everyone forgets just how much of a bet Bordeaux and the Australians in particular put on China. It was like the one horse in the race that everyone thought was going to work. And what we saw was sale, and you know, Bordeaux producers are sending their sons to go and live in Shanghai to run this thing. We saw demand went up like that, and it came way down. Why did it do that? Well, because the Chinese self-evidently never fell in love with drinking wine. They were gifting it, they were gambaying it, but not enough of them, despite the WSET success and so on, not enough of them wanted to go on buying it and drinking it, and we've seen that. And I don't think at the moment, we've seen another influx of wine from Australia. What I'm hearing is there's enough Australian wine to keep China going for another 2 or 3 years. We're also seeing the Chinese market, and I talked to Mr. Sun Jiang from Changyu, the biggest Chinese producer. They are moving into off-dry white wine and RTDs very heavily. The idea of the classic wines that we have been selling China, in other words, Bordeaux-style, Cabernet-style reds, have not caught on, and there's no evidence that they're about to carry on. So I wouldn't be betting on China, and I certainly wouldn't be betting on India doing it either anytime soon, and the Indian market is tiny. So yes, it will grow. It will come back a bit. But anybody who thinks it's going to come way up, I think, I can be totally wrong on this, but there's no evidence that I've seen. And of course, the Chinese mood is not particularly pro-Western in the way that it was when all this started. So actually behaving like Westerners, which was one of the reasons that we, in theory, got into wine, isn't the flavor of the day at the moment.
Yeah, I'll just jump in on this. Of course, the wine market has also been suppressed by the anti-corruption drive of the government. But what I do hear, particularly from German Riesling producers and New Zealand, is that there is a growing market for dry white wines. Okay, next question. Yes.
Thanks. I wanted to follow up on your comment, Robert, on the GLP-1, because how quickly do you think that this will impact the global market of fine wine, seeing that it's growing rapidly right now?
I think it's going to be, and I can be totally wrong, I think it's going to be like a rocket, because this year is the year that the patents come off in China. This is the year that, thanks to Trump, prices are coming down in the States. This is the time where instead of having to put a needle into your flesh, you can take pills. There's a lot of reasons why it's going to be more generalized, and health services around the world are embracing it. So up until now, it's been a small level of society, a surprisingly large one, but in percentage terms small. So I would say that we're going to see over the next year more and more people telling their friends they're doing it. It's going to be more affordable, and more doctors are going to be actually recommending it. So I would be very surprised if we were not sitting here at the end of next year with an awareness both from restaurants and from, I mean, food manufacturers are very worried. They're very concerned. Fast food companies are very concerned. I don't see why we shouldn't be.
Can I jump in on this? Because I'm actually writing a report on the GLP-1s right now. First of all, I think a lot of the panic has come from the packaged goods industry. So first of all, GLP-1s are a medication for type 2 diabetes and for obesity. And so anything that contributes to that is going to be in trouble because those drugs dissuade you from eating them. The impact on the alcohol market, I think, is not as straightforward as people simply not drinking. I think it will probably change how people drink. So we know smaller formats are going to become a lot more important, and the GLP-1s actually change your taste in ways that may not be good for aged wines because they knock out your receptors for umami. But the wines that might actually do well under the GLPs are the very fruity, simple wines that are suffering the most in the market at the moment. Or anything that's visually appealing, like cocktails, which you can make look really amazing. But the alcohol that, in my reading, is likely to be hurt the most by the GLP-1s is actually beer, because of the way the taste is changed. So that's my thoughts.
I'm with you, but I will say one thing. A, what you've just said is very relevant to the wines Tom's been talking about, the fine wines, the aged fine wines, and so on. And secondly, the beer companies, the big companies in those factors, they will reformulate their products very quickly if they have to. They have that ability. The wine business, by definition, it's far harder to turn the ship.
I don't know. I'm going to disagree. I think buy worry when it actually happens. I hear a lot of anecdotal information about how it's going to destroy the market, and I think there are lots of things that can still happen, such as small
I don't, sorry, just quickly, we don't go too long. I don't think it's going to destroy the market. I'm just answering your question that I think in terms of small portions will affect the market. I think we will see an effect, an impact on the market.
Does anybody else on the panel want to weigh in on this? We've sort of got two different views at either end.
Tom?
I mean, yeah, not to interject, I'm having fun. I mean, I don't think we're seeing anything really impact the sort of the top of the market. And the wines that I'm talking about are really, really the very, very top in terms of price point, in terms of quality. I don't think we've seen that just yet. I think the fine wine market, yes, it's got its problems, but it's more sheltered just naturally from some of these things. I think, as I said, sort of lower down, and I think, you know, cheap lager is probably for a very, very different conversation. I would say that the fine wine market, the top, is more secure.
I'll accept that.
Okay, next question. Anyone else got a question? All right, so on that note, I think we bring this to a close. Thank you very much for your attention, and thank you to Robert, Krista. Oh yes, actually, before you all go, Krista is giving away a bottle of 2012 Coche du Riz. And if you would like this amazing bottle, you have to go to his stand, which is N101 in this hall, I think, and you have to make a guess about how many wine lists are on Star Wine List. It's like judging jelly beans in a jar. If you win, you get the bottle of Coche du Riz.
In the interest of spreading fine wine around the world.
Yeah, that's right. So
you're all welcome to Star Wines.
So thank you very much.
Thank you.
Right.
Thank you, everybody.